Hey, everybody, welcome back to another edition of Market Talks with Dr. Stoxx. This is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com. That's drstoxx.com. We've been in business every market day since October of 2002. You go to our website, www.drstoxx.com, and you can subscribe to some of our award winning newsletters. We have daily and weekly letters. Or you can join me in the live options room, which is where I'm coming to you from today. Just go over to the subscribe button, scroll down to the live options room, $49 a month. And if you want to add on the live trading room, which is a bigger community and where we trade stocks and exchange traded funds and micro e-minis, then you can add that on at a discount. If you want to learn how to trade without necessarily me telling you what to trade, you go to the Learn to Trade menu and you can buy trading system manuals fully disclosed, showing you step by step how to use them, trading webinars where you'll learn chart reading skills, and a private coaching service. Okay, now we need to get to work here because we've got a lot going on in the market today. We were off. Yesterday had a really big, nice big move, big green stick move, which rejected completely the panic selling that took place on Friday last week. So Friday, June 13th, 2026, in case you're watching this 10 years from now, we had some worry about Iran and Iraq, right? They started lobbing bombs at each other. And of course, anytime you get bombs going off in the Middle East, the market's going to get a little bit rattled because that can always expand and get other countries involved. We don't want any of that to happen, of course. And we want this skirmish to resolve itself as quickly as possible with as few people dying as possible. So, but we're waiting. We don't have that yet. It's still in the resolution stage. So, the good news is that yesterday, Monday, new week, market gapped up and it was a go all the way until we took out a whole bunch of range highs. It was a beautiful breakout move for the market. And I said to my members at the end of yesterday's trading that we would probably get some back and fill today. Right? Anytime you get up to new all-time highs or you break out into a new range, you get up to 40, 60, 80-day highs on pretty good volume and a lot of good excitement in the market and all the right stocks are moving in the right direction. You typically cool off a little bit the next day. it just happens. It's just how the market works, right? It's always two steps forward and one step back. Well, today we're getting a little bit more than just one step back, and that's because the headlines are juicing up the fear a fair bit. We're hearing about bombs going off in and around Tehran, quite a lot of bombs going off there, and President Trump is calling his war cabinet. That's always a little concerning because we really don't want the United States to get involved any more than, I don't know what, consultation or whatever, sharing intel, that kind of thing. But we really don't want our guys going over there. And but anyway, that we just don't know. We don't know how this is going to resolve. So the market's uncertain. It's falling back today. We also had some bad data out this morning. The economy is not exactly firing on all cylinders. Retail numbers were low, but lower than expected. Tomorrow we get the Fed. Jay Powell is probably going to come out. Jay Powell, rather, is going to come out. He's not going to cut rates, but he may likely, in fact, especially with all that's going on now, hint at some rate cuts coming later in the year. He's hinted at 3. He's hinted at 2. I'm hoping at least he hints at 2, and that he's ready to go if the market needs him to grease the skids of the liquidity faucet. So we get that tomorrow. Then we have a day off on Thursday. The market is closed, and then we come back on Friday. And I've been saying after Monday's really big stick, a green stick, that we get some back and fill today. We get some choppy volatility around Powell tomorrow. Take a day off. Headlines come out. The talking heads sorted out. They get everything as clear as possible. And then Friday we come back. And Friday, I think, will resume the trend that we saw that started on Monday. We're very close. S&P, very close to all-time highs. You can see them right here, around 61, 62 for this version of the Micro E-mini futures contract. And you can see we weren't very far from that yesterday at the high. Same is true for the NASDAQ, but it's actually a little closer. Here's your all-time high, not on a closing basis, on an intraday basis. On a closing basis, it would be right here. And you can see we got even closer to that yesterday in the NASDAQ. Now, I've said this many times, when you rally up, especially when you've come as far down as we'd started, right? We're way down here, April 7th. It was a panic fear that led to that big sell-off. Great buying opportunity, of course. And we've been going up, 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 up ever since. That's a long way to travel from greater than a 20% correction, at least on an intraday basis, which would be technically a bear market, to go all the way from that level up to brand new highs. First of all, that in market history, that it's only happened about 4 or 5 times. Secondly, when that kind of thing happens, even when it doesn't go from 20% up to all-time highs, when it goes from a 10% to all-time highs, we tend to get a stall right up there, consolidation, a base forms underneath those highs as price coils up and discounts and consolidates and valuations catch up to the price and all of that. So that could last 2 or 3 weeks. So I don't think, I've been saying that June is typically pretty good in the latter half. We still have a bit of upside, so it still can be pretty good. But I think probably July, maybe August, is going to be a period of more tight and choppy range-bound trading as we build that base ahead of the next leg higher, which should come by the end of the year. So we just have to revise our map, right? You can't impose a map on the market and then make it fit. The market is reacting to realities that it didn't understand, didn't know about until they actually happen, and that's exactly what's going on right now. So I think given the tariff uncertainty, which is getting better and better as we go along, and given the potential escalation of this tension in the Middle East, we need to revise our bullish reading a bit and just say, maybe the best thing that could happen to the market would be a tight range-bound market. Okay, with all of that said, let's take a look at the small cap index, which has been weak, not as strong as the others. You can see it went sideways for quite a while when the S&P and the NASDAQ were racing up to all-time highs. But it has printed a nice looking and a very bullish inverted head and shoulders. We did get a breakout right there, which turned out to be a trap, unfortunately. Tagged the 200 period moving average right back down. That big flush out day there was Friday's panic on Israel. And without that, I think we would have stayed above the neckline. Because that happened, the market didn't know about it until it happened. It had to price that in. The good news is it held the 21 period moving average. Yesterday, it bounced off of that level. And the small cap index is flat right now. It's down 0.1%. That's huge. That really means that the market is not worried that much about a recessionary reaction to the politics. What we're really more worried about are these big conglomerate companies, not the small caps, but the big conglomerate companies that require free trading and open shipping lanes and lots of energy to do their thing. And if that starts getting shut down because of a war going on in the Middle East, then it's the big guys, the Teslas and the Nvidias and the Apples and the Googles that are going to have some trouble. Not the small caps as much, and the market's kind of reflecting that today. There's not any fear at all in the small cap index. It's just, twiddling their thumbs and whistling Dixie right now. So all that's good. It's a good sign. It's a good, healthy sign when the small caps are outperforming. But what we really want to see are some headlines coming out that make it clear that we're not going to get involved, America, that is, and B, Israel and Iran are starting to cool off a bit, and there's talk of a ceasefire and talk of getting to a negotiating table. When we get headlines like that, you're going to see the market go zoom. All right, so I do think that on maybe a 60% to 40%, the risk is to the upside, not to the downside. So I think we'll be okay, but we'll have to wait and see. The one real disappointment today is that Bitcoin is just awful, just ugly today. And I've been trying my best to find out causes for this. It had a beautiful day yesterday. So actually 2 good days in a row, right? Here's your 4-day pullback into the 21 rising period. You had a reversal bar on a Friday of last week when everything else was selling off Bitcoin was actually rallying off the lows, and then you had a beautiful big green stick yesterday to reverse all of that and give us back some upside momentum. However, it was on very small volume, as you can see down there at the end, down there at the bottom, and it opened, and it's been a trend down day ever since, and we're just kind of skirting around the lows of Friday, and hopefully that will hold. Now let me show you a 2-hour chart of Bitcoin. There are a couple of little hopeful things going on here. No, that's a 4-hour. Let's go to the 2-hour. There it is. So the one small glimmer of hope right now is that we're above Friday's low. Is that Friday? No, I'm sorry. That's a low from a couple of weeks ago. This is Friday's low, and Friday's low on an intraday basis is down there around 103. And so far, our low is much more like 104. So that's good. That's good. We want to see a higher low. We're also in a slightly uptrending LRC, linear regression channel. The pink zone is typically, that's a 2.0 standard deviation away from the midline of the range. That's typically where you get to see reversal moves start. And we've got a little green bar, little inside green bar that's forming right now on the 2-hour chart. And if that can hold, and maybe we get one last little burst before trading stops at 5 p.m., that would be nice as a reversal for Bitcoin for tomorrow, but I'm not holding my breath. Okay, that's all the charting work that I wanted to do. Here's something that I wanted to share with members of the options room. And you guys know this already, but I use black box Stoxx as my the software that I use to monitor option flow. Why is it important to monitor option flow? Well, first of all, I'm talking to members of the options room, so you all need to know, you all need to keep track of where the money is going in the options market for not only the big stocks, but also the big traders. Where are the big traders putting their money right now? Because that usually is a pretty good tip for what's coming down the pike in the next several weeks, even the next several months. So you want to keep track. What are the big boys doing, and what stocks are they most interested in? And every now and then you'll come across a stock, usually 3 or 4 of these a day, a stock that doesn't show up very often, and all of a sudden everybody's really interested in it, right? They're buying hand over fist, calls going off right at the ask, sometimes above the ask in good size, sometimes with time involved, sometimes with a higher strike involved. Sometimes the big money traders, they like to go in the money quite deep as a way of, leveraging an ordinary share trade. They leverage that with in the money deep options, so they're not losing as much in time value, and they're getting a lot more in the delta. The delta is the rate of change from the option to the underlying stock or index. So I like to just kind of hang out here in the flow room. I do have the my value per trade set at 100,000 minimum, so I'm weeding out all the little guys. Not that under 100,000 is a little guy, but reading out, somebody who's just trading his own account and might buy 1,000 contracts of Tesla or something. I want to see what the big money guys are doing, and so I usually start by going at 100,000, and then if I really want to drill down and see what the big boys are doing, I toggle that off and I go to something like 500,000. I only have these set at the ask or above the ask. So these are only buys of calls and puts. I've got both calls and puts, all the flow colors. Those are the different kinds of trades that go on. I've got them all toggled on. And I could, if I wanted to, just look at short-term trades, the weeklies. I could just focus on deep out of the money or deep in the money. I'm not going to worry about that right now. So let's apply that and see what's going on. All right, so we can see if we were just watching this, for a period, we weren't looking at the charts and we didn't know what was going on today. Just looking at this window right here, we can see that the market's leaning bearish, right? We're seeing a lot more puts than calls. Now, if we drill down into what they're actually buying puts on, it becomes a little more interesting, right? Target, here's a whole bunch in Target. These are big trades, right? 1.3 million. 531,000, 691,000. And here's a couple of biggies on Home Depot: 1.2 million, 1.48 million. Here's another one, another put, 2.9 million. Okay, so they're bearish on Target and they're bearish on Home Depot. You can tell that right away just from looking at both the size and the direction of the trade. Now, where is Target trading? Well, the time these went off, it looks like, in fact, here it is. Here's the spot price. So it's the same spot price, and it's pretty much the same uh, execution time. So this means it's the same guy. It's the same guy buying in 3 blocks of trades. So he bought 275 the first time, 270 the second, 380 the third. He paid 25.15 for the first, 19.7 and 34.55, and those are different prices because we're looking at different strike prices, right? The underlying spot price is 95. So a 120 strike means he's deep in the money. He's really deep in the money. And 115 to 95, 130 to 95. And why is he going at different strike prices? I don't know. It's possible that these are part of a more complex trade that sometimes happens. You know, you buy some puts deep in the money to hedge a bullish position when you think the market's going to be a little bit bearish, or you're adding on another leg into a straddle, for example. So all of that's possible. I'm only looking at buys. I don't know what the sells are, and it could be that these are the buys associated with spreads, and there are some sells from the same guy on that. So we don't know that information, but we do have to say that these trades do represent some bearish, something bearish. We can just leave it at that. And certainly with this guy at Home Depot. Okay. So, but just as a general rule, we can see we've got more puts than calls. I'm sure if we drill down to the size, we'd probably see bigger size on the puts than on the calls. People are a little skittish right now to buy, to buy calls when the market is a bit uncertain. If we click on the symbol, we get only trades for that symbol. So if I'm interested in, what's going on in SPY today, is it mostly bullish, mostly bearish? Well, obviously at the bigger size, it is mostly bearish, right? A lot of puts and not very many calls. And that looks like that's true all day long here. Here's a 5-minute chart. You can see SPY is all the way down off of the highs of the session, down near the lows of the session, and just kind of lounging down there. And it's probably where we will close today as well. Now, if we get some good news overnight, you'll see a nice gap up, but really tomorrow is all about the Fed. Okay, so that's those are some things that you can do. Now, let me show you a trick that you may not know about, and that is that over here on this right side, you can toggle on this little what do you call that? A megaphone, and you get all the alerts that have gone off throughout the day. So one thing Black Box Stoxx does is that it has an algorithm that draws out of all this information here in the main flow only the most unusual trades that are going on, right? Both bullish and bearish trades. It gives me alerts. And in fact, I could only look at those alerts if I wanted to by ticking on the alerts tab. And here's an interesting thing, right? So in the flow, there's a lot of bearish stuff going on. And we don't know just how bearish all of that is, but it's there anyway. But if we go to the alerts, the unusual trades today, the ones that are, maybe way above open interest, maybe somebody with the deep pockets is going bang, 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 a lot of rapid repeating trades right in a row. Trades that are on a ticker symbol that no one knows about, something's going on there. So this is where you're going to find that. And if you look at some of these trades, they're pretty much, I would say, more calls than puts. So that's a slightly encouraging sign that the unusual trades today are more on the bullish side. Okay, so back over here to the alert stream. All of those alerts are going to be triggered here. But here's the thing that I'm interested in. I can take off the option alerts. That's what we were just looking at. And I'm only going to go with alpha gold. I'm also going to let's put on something else. stock halts, dark pools, big blocks, price spike. Let's do price spike. Okay, so this is interesting, right? Now I'm going to get something unusual going on in the price of a stock that triggered a price spike alert. It could be a spike up, it could be a spike down. I don't know until I look at the chart, but that spike, that alert, is going to be over here. And you can see a whole bunch for MXC. I don't know what that is. I think it's in a fund, but it's getting a price spike alert. 5.9%. I don't know over what time period that is, but it seems like it spiked up or down. Let's take a look if we can determine that. Yeah, it's an up, a big up spike. So it's down here around 11, close to 12 at around 1 o'clock today. And it went from 12 all the way up to 16 in just an hour. That's a spike. That's a price spike. And so that's why it triggered all of these things. So that's interesting. Something's going on with this. What is MXC? Mexico Energy. Okay, so it's an oil and gas play. Someone's really interested in it so bad they need to get in that they're able to push that spike, that price up about $4 on a $12 stock. That's a lot. Circle, we've been looking at Circle in both of the rooms. I had a trade on it for a little while and got out of it yesterday. Glad I did because it's now a fair bit lower. But it's going off, triggering a bunch of spikes at around 147, 148. Let's see where the price is now. About 145. So this is a spike on the way down. So you have to make sure you understand where that spike is going. Is it going up or down? Now the other thing I want to show you, I'm going to toggle off the price, stock price spikes. I'm going to keep on Alpha Gold. What is Alpha Gold? Well, Alpha Gold is, there's only one. There's only one today. It's a very rare signal that means something like this. So we had an Alpha Gold on a GE, General Electric, came yesterday, I think. And today it's on Adobe. A couple of days ago, there was one on Microsoft. It's this, that the size of the trade and the nature of the trade, whether it could be deep in the money or with a lot of time or a strike price that's way out of the money. There's something very, very unusual about the trade, so unusual that it gets the label Alpha Gold. Okay, so of all the alerts, right, you're going to get 50, 60, as we saw, 50, 60 alerts throughout the day and more on a volatile day. But you're going to get one or two of these Alpha Gold alerts most days, and they're really, really worth paying attention to. Typically, these mark stocks that are about to make a big move because the volume is so unusual, the size is so unusual, the urgency of getting in so unusual that it has all the earmarks of somebody that knows something about the company. So I pay attention to these the most out of all the things, all the information that I get from black box stocks. I look at the Alpha Gold alerts the most. And if you only had to trade that one alert, which would mean you'd be putting on one trade about every other day, maybe every day. I'm not really sure if they get triggered every day, but we've had 3 alerts in the last 2 days. We had Microsoft and GE yesterday, and then we had Adobe today. So 3 alpha alerts, you're putting on 1 or 2 trades a day. And if you were only to do those, if you were to just, so here's the thing, you click on Adobe, right? What is the contract and all of that? And I'm in the wrong one. Flow, Adobe, come on, it usually gives me the, well, let me just search for it then. Let's see if we can find it. Okay, so, well, I'm not sure which one is the alpha alert. What time did it come? 11:07. It's this one right here. 11:07. It's a big call, $3 million call play. The spot price was 388. Here's the reason why. 500 strike price. 500 strike price. Now they're going out a ways. They're going out 1 year. So this is a leap. 1 year, This is a guy, he's paying 20 bucks, $2,000 per contract. He bought 1,500 of them, $3 million worth. And he believes that Adobe will be at least 520 something dollars 1 year from now. Okay, is that information that I am interested in? Yeah, you bet. Adobe's been kind of beaten down. It's a beaten down gem, lots of good value. I assume they're going to be coming back. So let's follow that. Let's see where it goes. Anyway, so that's that. Now you're going to have to pay. You can get a discount on black box stocks. Usually when they have sales, they typically have sales around like Memorial Day, Labor Day, 4th of July. They probably will have a sale. You can get it at about $850 or maybe less. So that's cheaper. But if you want some services that are a little less expensive, I can recommend two. And oh, and by the way, if you are interested in taking a free trial of black box stocks, leave me a note in the room and I'll send you a link. And I've got a link that I don't get anything back from it, but it's a link that will get you to a free trial. The only way you can get a free trial to black box stocks is you have to be invited by a member. So I'm a member, I'll invite you in for that. Okay, now if you go to Twitter, you follow me on Twitter because I don't follow that many people with my Dr. Stoxx version. I have another one for personal things. I don't follow that many people, but the people I do follow are really worth following, right? So if you want to get like 100 really important follows on Twitter for not academic, for market things, just click on my profile and where's my profile and go to my following, 164 followers, and you can just follow these guys, right? So let me see if I can go through here and find. Okay, well, I don't want to do that because that's going to take too long. Let me just search. So one of the sites that you would want to follow if you're interested in a kind of free ride on option flow is Cheddarflow. Cheddarflow is a service like black box stocks. It's a lot cheaper. I'm not sure if it's a lot cheaper, but it is cheaper. And they'll give you all of that flow. They'll give you some unusual ones. They kind of highlight ones that you should pay attention to. So it's a very good service. It's very user friendly, and black box stocks takes a little getting used to. But Cheddarflow, and they're a very good follow on Twitter, and they will sometimes tell you throughout the trading day, hey, this is an unusual order right here. Here they're retweeting somebody who's got an unusual order. Qualcomm, 3.2 million. This was 4 hours ago. Qualcomm, unusual flow this morning. Maybe some news is imminent or a hedge. Leverage 2x long trade with QCML. 3.2 million trade. I don't know anything about the details, but we could go into black box stocks and find it. Let's see. 3.2, here it is right here. Well, it's going out a year, so this isn't imminent. They're not looking at an imminent run in Qualcomm, but they went right at the money, and they paid $24 for that. So take that for what it's worth, but that's something that you can look more deeply into. Here's a Bitcoin bull. Good to see that because there aren't very many of them out there today. Yeah, $4 million on IBIT. That's a little bit of a hopeful sign, right? I like to see that because I'm long Bitcoin and I don't like what's going on today. Okay, what else? So Cheddarflow. Here's some of their flow itself. SPY, puts, yeah, above, buy. This is kind of like just what we saw in black box stocks. Here's somebody buying the VIX, right? 1.2 million call on the VIX, and I think they bought this yesterday, so they might be totally cashed out today. They only paid 39 cents for those, $39 each, and they bought 30,000 of them. I don't think that's correct. Here, yeah, 30,000 VIX calls. How did they know? Yesterday the market was way up and VIX was way down. Anyway, yeah, that was yesterday, June 16th. Ooh, Okay, so if you pay attention to Cheddar Flow, because Cheddar Flow, when did they set that out there? 10:30 in the morning. 10:30 in the morning yesterday, the market was great. VIX was down, and they were highlighting a guy who's buying some out of the money VIX calls for really cheap, and he bought a lot of them. He might have known something. Yeah. Okay, so Cheddar Flow, that's a good one. Let me see if I can find the other guy. There's another guy that does something very similar. Options. I think it's options something. No, it's not. And if I don't find it, I'll find it later and put a link in the. It's got a weird name. IO something like that. No. Okay. Well, I'm sorry. I can't find the other guy, but Cheddar Flow is really good. And there's an individual. He runs a subscription service, only does options, but he posts a lot for free on both Twitter and StockTwits, and his name is Wall Street Jesus. It's not that one. I hope I can find him here. Wall Street. Let me do this. At Wall. There he is. Okay. So his handle in Twitter is Jesus with a $sign. His handle is Wall Street Jesus. His username is Jesus. Has nothing to do with the real Jesus, but he is very generous with what he's seeing in the market, and particularly with unusual calls over puts. So he focuses more on the bullish side of things, and he gives you a lot of good information, general market information, as well as option information and flow information. New York Stock Exchange new highs 31, new lows 42. Here's a chart for oil. I don't know what OVX is, crude oil volatility index going way up. And let's see what else he's interested in today. Okay, so ADM. He gives a put call ratio, the number of puts that are held in open interest. I don't know if these are near term or all puts. I don't know. 465. And the number of calls held in open interest, 15,000. That's a huge. I mean, usually it's 2-1, maybe 3-1, but this is like, I can't do the math, 30-1, something like that. So let's take a quick look at ADM. This is Archer Daniels Midland. I think it's an accounting firm. No, it's not. It's a farm. It's a agricultural firm, fertilizer and stuff. Well, you can see why they're interested and why they've been buying calls over puts. It's in breakout mode. So yeah, a nice value play. The growth is not interesting, but the price action is, right? A big cup and handle or inverted head and shoulders, which is patterned out here by FinViz. Broke out Friday. That's interesting because the market was falling on Friday. So this company, this stock, is not at all worried about the skirmish in the Middle East, not at all worried about tariffs. It is a bit worried about tariffs, but not right now. Broke out Friday, confirmed that breakout on Monday, and it's holding up near the highs, and it's even a little green today when everything else is falling off. So that's a great looking chart. And hey, I wouldn't have found that without following Wall Street Jesus and him giving me that insight that everybody's buying calls in this company and very few people are buying puts. So that's huge, right? That's very good information. Take a look at a couple. Here's Adobe, right? We just saw that one. I got the alert from it from Black Box Stocks. He's giving me the alert for free. Maybe I don't need Black Box Stocks. Clack. I haven't looked at that chart in ages. I used to trade that back in the 90s, along with the old Broadcom, BRCM, now Avgo. Clack. Let's see if we can find one where he gives us the put to call ratio again. Here we go. AMD put to call 205,000 puts, 568,000, more than twice calls. Now we already know AMD's been doing really, really well. We're long in the other room, and we've been enjoying the ride. We're long in the trend trade letter, one of my services, enjoying that ride. And so AMD was the stock I highlighted in my IBD live appearance on Friday last week. And it just went crazy. yesterday. And let's take a look to see what it's doing today because I haven't really seen. Okay, so it's holding nicely. A big up day yesterday, breakout day, holding that. Not exactly a confirmation day, but the fact that it is slightly green when everything else is red, especially tech, it's a good looking chart. Yeah, this is a good. AMD is just in early days here. In fact, we probably should get long some calls ourselves in the live options room. All right, guys, I'm going to let you go. I'll wrap this up. I'll produce the video, put a link in the room. We'll get back to some trading. We've got an hour left. God bless everybody. See you in a little bit. Bye for now.